Hi, Jonathan York from Bay Financial Partners, looking at the investment markets. Still a pretty choppy time out there for equities. Certainly, the US equity market is really finding some pretty volatile times. In the last couple of sessions, we've seen the market down around 500 points and then 400 points, only to see most of those losses sort of erased by sort of closing time. Now, obviously, that gives a couple of sort of pointers out there. One, there are a few buyers out there. Potentially, the market is a little bit oversold with the sort of increased volatility over the last sort of couple of weeks. But also, as well, the market is really unsure as to which sort of way the market is going to go in the next sort of 3 to 4 months. That's really on the back of the uncertainty out there. Obviously, you've got the trade dispute, and that's taken another sort of twist recently with the potential extradition of Huawei's CFO to the US. That's obviously placed increased pressure on the sort of Chinese-US relationships. But also as well, in a sort of fresh development, Qualcomm and Apple in a little bit of a spat out there with iPhones and potential sort of blocking of sales out in China. Now, again, how this all sort of plays through, it is going to be interesting. To say, the G20, we had this sort of 90-day sort of truce, if you like, sort of respite where they're trying to get a sort of deal negotiated. But certainly there's a couple of spanners in the works at present. Also, as well, obviously, you've got the Fed meeting in the next sort of week or so. Most expect a Fed rate increase. Although the data on the jobs front was a little bit weaker than anticipated. So does that play into the Fed thinking? Probably not, because it was pretty well signaled that there was going to be a further rate increase in December, and that's pretty well sort of baked in at present. But then how we progress going forward into 2019 could be very interesting. But also, if you look at what the Fed's been doing, with sort of reducing the balance sheet, certainly for this year, that has the sort of implied impact of around a sort of 100 basis points on interest rates. And what they're proposing for sort of next year, it has the proposed sort of potential for around another sort of 125 increase on rates. So obviously that draining liquidity in sort of the Fed's balance sheet all has a little bit of a tightening effect out there, and I say it's just going to be interesting to see how it does sort of play through. Interesting as well, looking at the sort of year-on projections for the S&P, the highest around sort of 3250, most conservative sort of Morgan Stanley around 2750. Consensus and aggregate seems to be around sort of 2950 to sort of 3000, which is still a sort of pretty reasonable lift from where current levels are. If you look at sort of fundamentals, corporate earnings are reasonable. You've still got record low unemployment. So you've got a pretty strong and robust economy. So just the major sort of sticking point appears to be sort of the trade tariffs and the sort of potential trade war between the US and China. Then, of course, we've got President Trump, still sort of tweeting left, right, and centre about, many things that he has no sort of regard for or real understanding either. Just to cite one example, the recent unrest in France and in Paris and the riots there, he tried to liken that to the fact that it was a sort of rejection of the Paris Accord. As most people would know, that was sort of the cleaning up of the sort of green energy and so trying to curtail carbon emissions, etc. Now you only had to look at the news footage to see they weren't protesting about that. They were protesting about sort of taxes that were taking place from the French government and how that was impacting the low-income earners. But again, if you looked at the actual footage, most of it just seems sort of wanton violence and sort of vandalism, looting of shops. That's not really protesting against taxes. The revolving door is still alive and kicking at the White House as well, with General Kelly leaving his office before the end of the year. Further evidence of potential sort of discord within the White House and the administration. And, it's really hard to see how you're going to get a sort of a grip on this and get a stable, the sort of working party going forward. Now, as we have sort of touched on it, but obviously, quite a bit of unrest in France. Again, going to be sort of very interesting to see how that sort of plays through. And also as well, whether it actually sort of gains a little bit of momentum and starts to spread through the rest of Europe. We've got Brexit as well, and sort of PM May has delayed the vote, which, potentially would have been a crushing defeat. She's gone back to Europe to try and negotiate the one sort of major sort of sticking point for the UK, which is sort of the Northern Ireland sort of backstop. And it's going to be interesting, one, to see if the EU will sort of give a little bit of ground, and then see if they can come up with some sort of compromise. But again, sort of quite interesting to see, again, the sort of protesters on the street not really understanding what they were voting for. They were sort of being interviewed and saying, yes, they voted for Brexit and to leave the EU, which yes, they did, but they didn't expect a deal to be put in place. But how are you going to leave the EU without any sort of deal being structured in terms of sort of trade deals? And so really going to be very interesting to see, what comes out of these latest sort of meetings between PM May and the EU. Certainly there needs to be something put in place. New Zealand's sort of ticking along, a little bit of pressure on sort of dairy prices. They're sort of down and it's being sort of revised down a little bit in terms of the sort of payout to around sort of $6 to sort of $6.20, from around that sort of $6.25 to sort of $6.50 earlier in the year. New Zealand government under a little bit of pressure as well, and in terms of some of the sort of projects, etc. Kiwi Build is obviously sort of pretty high profile, trying to sort of solve the housing crisis, and that's certainly facing a number of issues out there. But in terms of interest rates, the Reserve Bank has said, there's no reason for increasing rates. They look pretty benign and will sort of stay pretty much on hold for 2019. That's obviously, putting a little bit of pressure on sort of savers out there, as sort of TD rates are still pretty low. But if you are looking for income options, say call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz. New Zealand, though, is sort of benefiting from, again, record low unemployment. and also a little bit of an easing of sort of gas prices as well. Just on the back of that, obviously, Bay Financial Partners, we'd like to wish everyone a very Merry Christmas and a Happy New Year, and we look forward to speaking to you again in 2019.